Stocks continue to depreciate in price this week as the key indicators of the Nigerian Stock Exchange fell to a year-to-date of 12.92% despite the release of some mixed earnings. The reasons for these declines will be laid bare on capital markets tonight. Hello and welcome to the program. I'm your host, Temple Ashaju. Now, during the week, the dividends payment system of the Nigerian capital markets got a facelift from the financial market regulators. An e-dividend platform was launched by the Securities and Exchange Commission, that's the SEC, in collaboration with the Central Bank, the Nigeria Interbank Settlement System, NIBS, the Stock Exchange, as well as the Depository or the Central Securities Clearing System. Now, the likely impact of these new modus operandi in comparison with what obtains in other climes will be examined today on the program. We'll also review some of the earnings that trickled into the market during the week and find out why some of the quite impressive numbers failed to drive the market northward. Now, our two main discussion points today will be discussed by global markets analyst Ikmemosa Ohumavi, who's based in the UK. But before we engage in that, let's take a sneak peek at some of the figures that crunched the most in terms of gainers and losses in the markets this week. Now, the Nigerian stock market slipped into 8 consecutive days of losses as the all-share index ended the week southward, losing 2.9% week on week and 12.9% for the year-to-date performance. The all-share index fell to 30,180.27 points, while the market capitalization shed 9.5 billion naira to settle at 10.3 trillion naira. Of the 55 decliners that weighed down the markets in share prices, Portland Paints led by 18.35%, coming ahead of UPDC rates, which lost 1 naira 39 kobo. Now, paints and coatings manufacturers dipped 13.53%. On the flip side, Tranex led 15 other shares with gains of 17 kobo, while eTransact pulled 13.21% gains as Naco Avians recorded a total of 442 kobo in appreciation. Now, Access Bank, Oando, as well as Zenith Bank were the top 3 volume boosters of the week, accounting for a total of 541.49 million shares and trades. The financial services sector led the activity chart with 837.73 million shares, while the oil and gas was represented by over 200 million shares as the ICT industry garnered 115.88 million. And at the end of the week, 1.36 billion units of shares were exchanged by investors for a value of 17.95 billion naira in 17,391 deals. Of course, we see a lot of sell-offs in the Nigerian capital market, especially on the side of equities that account for the bulk of the figures that we see in the Nigerian Stock Exchange. We also know that in the areas of bonds, we have a lot of we have declines in terms of subscriptions, but more than 60 earnings were released to the authorities of the Nigerian Stock Exchange this week. We will take a look at these figures and find out what is responsible for the underperformance of each company's half-year or second quarter results. But that comes up after this short break. Welcome back to Capital Markets, reaching you on Channels Television platform. Our Twitter handles are open for your thoughts on our conversation. So leave your tweets at Channels TV or on my personal handle, which is at Tempili. Tempili is T-E-M-P-I-L-I. And let's talk about issues and developments in the Nigerian capital market, whether in the fixed income side or equities, or talk about ETFs. Now, we know that during the week we had over 60 earnings that were released in the market, and if you've been following us on the news, if you've been following our news track on Channels TV, you would have realized how we tag them. We see them as bittersweet earnings, and that is because quite a number of these earnings have not been impressive. A few of them that were impressive did not drive the market into the green territory. So let's take a look at what Seplat had during the week. That company was able to get a revenue of 48.76 billion naira for the first 6 months of this year, and we realize that if we go by comparison to 2014, where we had 60.29 billion naira. A 19.1% decline was noticed in that figure in terms of revenue for Seplat Petroleum Development Company. Its profit before tax came in at 8.12 billion naira, and that's a 66.5% decline compared to last year for the same period, H1 last year. Now the profits after tax came in at 8.169 billion naira as well, and that's a 66.3% decline in that company's record. And we know that the basic earnings per share right now is still 42.55. That's 42.55. That's some 11.6%. Now the next company we've got on our list is GlaxoSmithKline, which is in the health category of the Nigerian stock exchange. The company was able to post a 15.44%, 15.44 billion naira, which is 1.4% decline in comparison with the same period last year. And the profit after tax came in at 297.37 billion naira, a decline of 65.6%. We all know that this period in the Nigerian economy is coming with a lull with regards to foreign exchange, where the naira has fallen by about 15% this year. We also know that the lack of policy direction of the new administration is still weighing down on the economies, is weighing down on investments, on businesses across the country. And so a lot of companies continue to post unimpressive earnings. The period under review for majority of the companies, which is the second quarter, was also when we had elections in the country, and that has affected the appetite of investors for all of these companies. Now we had First City Monument Bank, that's FCMB, which came in with a 77.35 billion naira record. That's 11.1% gains over what we had for the same period last year. That's for 2014. Last year, the company had posted 69.62 billion naira. But for the same period, quarter two, we've got 77.35 billion naira record. We know that the company, FCMB, has of course been engaging itself in retail banking. It has done some rebranding. It has rebranded, changing from the black and gold to purple and gold. And of course, we know that at some point that company took a loan, an international loan, so a foreign loan rather, and that seemed to be impacting on the shares of that company. We also reckon that profit after tax for that period, for the same period under review for FCMB, was 8.3 billion naira, and that is 13.3% decline in its record. The profit before tax still was not too good. One thing that is notable among these companies, the 60 companies that released their earnings this week, was that they did not really give, they didn't make public the reasons for the losses or the reasons for their gains or profits in the market. But if we go by what we see in the macroeconomic environment, on the indices and the macroeconomic variables, we'll know that all of these major reasons that are impacting on the country and its economy have been having a negative impact on businesses. Now, on Sky Bank, which is a mid-tier bank, it came up with a gross earning of 85.20 billion naira, and that is a 33.4% gain in the gross earnings, or if you like, a revenue of that company. The profits before tax came in at 10.71 billion naira, 47.4% over the 7.26 billion naira that was posted for the same period last year. But also, we've got, for the profit after tax, it's 8.79 billion naira. And of course, that's a 52.0% increase over what we had last year, which was 5.78 billion naira. Now, Skybank seemed to have an impressive record there. The share price on the market is still more of a penny stock though, but of course investors know so well that those are the stocks that move faster in the market.